So welcome, this is question 4 of the August 2021 Financial Accounting Section 1 paper. August 2021 Financial Accounting Section 1 paper, question 4, and it's on non-profit making entities. Non-profit making entities. Non-profit making entities. So the question is, want us to come up with the bar statement of profit or loss for the year ended 30 June 2021, statement of income and expenditure for the year ended 30 June 2021, and the statement of financial position as at 30 June 2021. So we have this, the following balance extracted from the books of Afia Youth Club for the ended 30 June 2020. And these are the balances as at 30 June 2020. Then the club's receipts and payments account for the year ended 30th June 2021 as follows. These are receipts and payments. So receipts are on the debit side, payments are on the credit side. They have been listed there. And then we have additional information. The following information relates to the club as at 30th June 2021. So we have subscription arrears, bar creditors, bar inventory, subscription in advance, and bar wages due. Then interest receivable on long-term deposits amounted to 2.2 million. Long-term loan is repaid in annual installments of 30 million, excluding interest. The interest for the year ended 30 June 2021 was 9.2 million. Then you have depreciation, equipment on straight-line basis, furniture and fittings on a reducing balance basis. And it is a full year's depreciation is recorded on assets in the year of purchase and no depreciation in the year of disposal. So the 3 questions will give us 20 marks. Good. So let's solve them. We have solution. So we'll come here straight to solution, and we'll start with the first part, which is the bar statement of profit or loss for the year ended 30th June. I think the question was Afia Youth Club. So we'll go straight to the solving the first question. Afia Youth Club, and this is bar financial statement. Bar financial statement, and it is for the year ended. For the year ended 30th June 2021. Then we underline that. Bar financial statement, underline, Afia Youth Club, underline. Then, as it's our norm, the best is to have 3 columns and restrict the zeros. So we can have the 3 columns and restrict the zeros respectively. Then this side will have the particulars like that. So this is a bar financial statement, and financial statement, we know what we ought to do. We start with the trading account, then the P&L account, and the trading account is purely sales less cost of sales. So we'll go straight to sales, get the figure for sales, and let's see if it has workings. So what is our sales? Sales, we expect it to be in receipts and payments. So bar sales, you can see it's here, 332,000. Do we have any workings on sales? Anything that can reduce the sales? Check around, check. There seems to be nothing to reduce the sales. So we simply come here and say sales, 332,000. So sales, because there is nothing, we don't have any workings on sales, we simply write it as it is on the outermost column. Then we less the cost of sales, and under cost of sales, we have the opening stock. So we'll identify the opening stock. Opening stock is likely to be found here. This is where we have, remember these are the particulars as at 30th June 2020. So go through this, and you can see it's here, bar inventory. This is 30th June 2020, and we are preparing the books for 2021. So that becomes our opening stock, 18,400. So we'll come here and say, put it in the inner column, 18,400. It's only the cost of sales that will push the outer column. Then add purchases. Now purchases, if it has workings, on the innermost column. If it doesn't have workings, we push the outermost column. So purchases, we have bar purchases here, 149,400. But you have to confirm if we had something that will affect these purchases. Purchases is related to creditors. So there's something here on bar creditors. And there's also bar creditors. There's bar creditors here. So this is additional information, 30 June 2021. So then what do we do? What this means is that we close the year with this as the creditors, 16,000, and these are what we purchased, and then the 16,800 is what we started the year with. So if we are working out the purchases for this particular year, we'll simply take the 149,400, which are the purchases for that year, plus 16,000, what we closed the year with, minus 16,800, because it doesn't belong to that year. And this should be able to give us the purchases of this year. So it should be 149,000 plus 16,000 minus 16,800. This will give us 148,200. 148,200. So these are the purchases for this year. But I've not done this the accounting way. So if we were to do it the accounting way, we'll simply talk of the debit, the credit, and then we talk of the creditors account. So the creditors account will start with this is balance brought down of 16,800. So balance BD 16,800, and then we have the purchases. Purchases simply means money goes out of the bank. So we credit the bank account, we debit the creditors account. So we'll come here and say bank account. Come here and say bank account. Bank account, how much? 149,400, like that. And then at the end of the year, bar creditor 16,000. So we'll say balance carried down 16,000, like that. 16,000. Then we close these books. We close the books like that. We get the total 149 plus 16. This will give us 165,400, and this side also 165,400. So 165,400 minus 16,800. This gives us 148,600. Is it 148,600? 148,600. Looks like 148,600. Why are they not agreeing? Maybe there's a mistake here. Looks like it's here that we've made so this, let's just repeat this summation here. This will be 149,400 plus 16,000 minus 16,800. That gives us 148,600. So 148,600. You can see the answers are the same. This is the accounting language. So you can just have it as your workings, that this is what we are talking about. So this is what will be transferred to the income and the expenditure. What will be transferred to basically that will be the purchases, balancing figure. I think let's just call it purchases. Let's just call it purchases for that year. Purchases for that year, and this is the balancing figure. So let's call it purchases, 148,600. So when we come here, we'll talk of purchases, 148,600. Do you have any workings on purchases? Confirm. We were just looking for purchases, and we have it. Now confirm if we have any workings on purchases. Let's confirm if we have any workings on purchases. So let's give it some time. Looks like the word is not responding. Okay, good. There we go. So, where are we? We are looking for any workings on purchases, like purchase returns, carriage inwards. We don't have. So we'll just stick with this figure, 148,600. So under purchases, we have 148,600. And since we don't have any workings, we'll just list it there like that. So then we continue with our journey. So after purchases, we less what? Closing stock. Less closing stock. So closing stock, we simply come to what we had at the end of the year, and this is here. Closing stock, buy inventory. You can see buy inventory here at 19,800. So we'll have buy inventory 19,800 like that. Put them in brackets. So then we have 18,400 plus 148,600 minus 19,800. That gives us 147,200. So 147,200 like that. So do we have any other thing? If we don't have any other thing, what we need to do now is to take this sales less cost of sales. So minus 332,000. That gives us 184,800. 184,800. This is our gross profit from the bar. So if we have the gross profit of 184,800, the next thing is now to add incomes and gains. That's our profit. We're now entering the profit and loss account. So we look around if we have any income and gain. And the best place to look for this is on the receipt side. So we don't have any receipt side. Go to the additional information. Interest receivable on long-term deposits amounted to. This one is not for the bar, so we leave it. Okay, so we will assume there is no any income and gain. So we go straight to expenses. We want to less than the expenses. So we'll check if we have expenses that are specifically related to the bar. And you can see we already have bar wages. Have bar expenses here. We have bar wages. We have we'll pick only the ones that are related to the bar. So bar wages, and we also have bar expenses. There was something about this bar wages. You can see this bar wages due. Do you have anything again? Bar wages here. Bar wages, subscription advance, accrued bar wages. Now you can see bar wages. There is accrued bar wage, there is bar wages, and there is we also have bar wages due here. The best thing to do here is to create an account like this one. But before you create an account, let's just see what is happening. These accrued bar wages, they don't belong to this year. So 2,300 not for this year. And then what we paid for was 151,200. 151,200, that's what we paid. You can see bar wages, we paid. These are payments. So we paid 151,200. And then what was remaining is, by the end of the year, is bar wages due 3,200. So if we want to find out the actual wages for that year, we'll simply take what we have paid plus what is outstanding as at the end of that year minus what we found on board, what was outstanding. You see? So this is what we basically expect. So let's work it out and see. 151,200 plus 32 minus 2,300. This gives us 152,100. So 152,100. This is basically the picture what should happen, because this is what we paid, this is what was outstanding, and this is what we found from last year. Automatically, this is not for this year, so we less it, and this is what we are going to find out. So let's put this in an accounting language. Let's put it in an accounting language. How do we put this in an accounting language? The language that is good for accountants. We say wages, accrued bar wages. Found this. So it's 2,300. This is accrued accrued bar wages, we'll talk of balance brought down 2,300. And then the wages that were paid that year, wages that were, sorry, accrued bar, just a minute. The wages that were paid that year, bar wages 151,200. So this is from the bank, we credit and then we debit. So it will be 151,200. This 2,300 supposed to be on this side, sorry. The bank will appear here. This is 151,200 what the bank has paid. Then the balance brought down will be 2,300. Then balance carried down will be this one. How much? Bar wages due 3,200. 3,200. And then the work out the balancing figure. This will be 154,400. 154,400. So 154,400 minus 2,300, that gives you 152,100. So 152,100, these are the actual wages paid. So that's how we will have our wages account, credit and debit, the same language. But it's always very important that you understand first what you are trying to do. We've debited the wages account because this amount is from the bank, so we come to basically appear on the debit side of the wages account. That's how actually you're supposed to treat wages. Then this is an accrued, that's why it finds itself in the credit side. Okay, so wages 152,100, 152,100. So 152,100. Have wages here, 152,100. And then we go to the next item, which is what? Rates. Because the question is not so specific or clear on the rates, whether they are for the bar or not, we leave it at that. We'll put it under the whole club. So we go to this one that the question is very clear. Bar expenses 58,400. Do we have anything on bar expenses? Nothing. Do we have anything on bar expenses this side? Nothing. So we'll pick it as it is. Bar expenses. So bar expenses here. Bar expenses. This is how much? Bar expenses is 58,400. 58,400. So 58,400 like that. Don't think if we have any other equipment purchase, bar transfer. I don't think if we have any other that is very specific to the bank, to the bar. So we'll add the two, 152,100 plus 58,400. That gives us 210,500. 210,500. And because these are expenses we less, so we'll have minus 184,800. Oh, looks like we have a loss. These are loss, 25,700. It's a loss, so we put it in brackets like that. Net loss. So it means the club is making losses. We have a loss of 25,700. So that is part A of the question. This should be able to give you 4 marks. We go to part B, statement of income and expenditure for the year ended 30th June 2021. So we'll still start with the heading, Half-Year Youth Club. Half-Year Youth Club. And then we say statement of income and expenditure statement. Income and expenditure statement for the year ended. For the year ended 30th June 2021. Like that. So the statement of income and expenditure for the year ended. Now the statement of income and expenditure for the year ended that we will also have as usual, let's have our 3 columns, shillings, shillings, and shillings, like that. And then we'll start with the incomes, and the first, we'll start with the incomes, then less the expenditure. This statement is quite straightforward. We have incomes, then expenditure. So we'll start with our incomes, and incomes, the first income that we're going to start with is the, because this is a club and it's an non-profit making entity, the most common source of income is the subscription. So we'll start with subscription. This is an income. Of course, we have competition entries here. This will be an income. We also have bar sales. So we have that also. So let's start. We'll start with the subscriptions. Definitely subscription is an income. Subscription. The only thing about subscription is that there are quite a lot of workings, which we can see just from here. Because we have subscription, you can see we have subscription in advance, subscription in arrears, we have subscription received, we have subscription in arrears, and subscription in advance. So the best thing to do for this is just to open up a subscription account. So let's open up our subscription account here, so that we can work this one out. Subscription account with the credit side and the debit side. So subscription, remember now we have this is for the previous year. This is for the previous year. Subscription in for the previous year, you have subscription in arrears, 5,000. Have subscription in arrears, 5,000. And then we have subscription in advance. So subscription in arrears. This is an income in arrear. If we have outstanding income, that is a debit. It's actually outstanding income or incomes in arrears. They are supposed to pay us. So this is a debit entry. Subscription in arrears, 5,000. So we'll come here and say balance brought down. How much? 5,000 in arrears. And then these are we have subscriptions in advance. Subscription in advance. They had paid us before the year started. So those ones were liabilities to us. They were liabilities to us because they paid. Members paid, but the year had not commenced. So it's a liability as at that particular year. So subscription in advance, since it's a liability, will be on the credit side, and we'll have 1,600 on the credit side, and we'll simply say balance brought down. Balance brought down. This is an advance. How much? 1,600. And these are arrears. Balance brought down, these are arrears. 500. Then we go to the next thing, the subscriptions for this year. Subscription received. If we receive, it hits the bank account, so we debit the bank, which means we are going to credit the subscription account. And incomes are actually supposed to be credit account. So subscription received, we are going to credit the subscription account, 136,000. So we'll come here and say bank account. This is the account that is affected, bank account, 136,000. This money is hitting the bank account, so we are going to debit the bank and credit the subscription account. Then we come to the end of the year. End of the year, we have subscriptions in arrears. These ones are now subscription in arrears. They were supposed to have been paid, but they have not been paid. They were supposed to have been paid, but they have not been paid. So this is money that is not in the organization, yet it's supposed to be in the organization. And then we also have subscriptions received in advance. Subscriptions received in advance. So what we are going to do is the subscription received in advance. These are now, this time, remember, these have been received, but they don't belong to this financial year. So we remove them from this financial year. So we will simply say that one is supposed to be credited, so as to show that they don't belong to this particular year. So subscription in advance, we'll talk of balance. Now this is carried down, advance, how much? This is 2,400. And then here we'll have balance, brought down, and these are arrears. They were supposed to be paid this year, but they have not been paid this year. They will be paid later. So this is how much? Subscription in arrears, 4,000. So we are only receiving, you can see, this is, we are interested in subscription for this year. So this is what was paid last year, but it belongs to this year. This is what was actually paid. This is what was supposed to be paid this year, but will be paid next year. So we've collected all that is supposed to be paid this year. It's here. This was doesn't belong to this year. It belongs to last year, and this one doesn't belong to this year. It belongs to the following year. So we are moving this. We are taking what belongs to this year. So we get the totals here. The totals. This is 1,600, that is 5,600 plus 136,000. Sorry, 5,600 plus 136,000. That gives us 141,600. 141,600. So this will be our balancing figure, 141,600. And then the other side we have minus 7,400. That is the total. We have 134,200. So 134,200. This will be our that will be our income and expenditure figure. Income and expenditure figure. Income and expenditure account. So this we are transferring to the income and expenditure account. And that's why we have income and expenditure account here. So we'll simply come here and say income and expenditure. As part of the, because we've already worked out all these things, we'll just bring the total here, which is 134,200. So we have it 134,200 there. Then we look at the second income. The second income that we might be having here, we have competition entries. It attracted 29,600. Does it have any direct expenses associated with it? Yes, we can deduct them at this point, or we can list the gross amount, and then also when it comes to payments, we put the gross amount. But the best is to work with the net figures. So let's just check. Competition entries 29,600. Do we have any expense, any payment that is related to competition directly? Yeah, we have it here. So competition ticket cost. This is the first one. Let's check if we have any other one. This is equipment. These are no. Okay. So we have only this. So we'll talk of competition entries 29,600. Can come here and say competition entries. We say 29,600 because it has workings. We'll show them in the inner column. Competition ticket cost. The figure was competition ticket cost. The figure was how much? 20,800. So 20,800. Have 20,800. So we less that one. What do we get? 29,600 minus 20,800. That gives us 8,800. So this is the income from that particular docket. 8,800. Then we check if we have any other income again. Do you have any other income? Subscription, competition entries, bar sales. Now, this bar sales is a bit tricky. Bar sales is a bit tricky because it's a loss. So we may not put it right here. So let's check if we have any other, because now it's no. Interest receivable on long-term deposits amounted to 2.2. So that is an income definitely. So we'll say interest receivable 2.2. Interest receivable 2.2. Interest receivable 2.2, like that. Good. Okay. Do you have any other income? Check again. Interest receivable, annual income repaid, Depreciation, I think we don't have any. So we work with this. Let's get the total here. 134,200 plus 8,800 plus 2,200. If we had some profit from the bank, we'll have included there as an income, but now we don't have a profit. The bank has not given us profit, so we'll just work without it. So then we go, these are incomes, so we go to the expenditures. We go to the expenditures. So let's list again the expenditures here. Expenditures. List the expenditures. So go back to the question. The expenditures. There we are, expenditures. Now, we are going to pick the expenditures as they are. These ones, these ones just for workings. So we'll start with the rates. Do we have rates here? Rates. No rates. So we have rates 20,000. Do you have rates outstanding? Rates paid in advance? We don't have. So we'll pick it as it is. Rates is 20,000. So rates 20,000. We're picking rates as it is. Rates 20,000. Put it in the inner column. Then we go to the next one. Let's identify the next item. So we had the rates. Then loan repayments at 9,200. There was something about the loans. We'll come back to that. Bar purchases, equipment purchase. This is an asset. Transfer to long-term deposit. Balance carried forward. Subscription balance. Subscription bar wages due. Interest receivable on long-term amounting to that. We capture that. Long-term loan is repaid in annual installment of 30,000 excluding interest. The interest for the year ended 30 June was 9,200. So this is interest. Loan interest 9,200. That's an expenditure. Loan interest 9,200. So we capture that. Loan interest 9,200. 9,200. Remember, we have not picked the 30,000 because that one is we are reducing on the loan. It will have the effect elsewhere, not here. Here we're interested in the expenditures. The 9,200 is an expense actually, and that's why we've singled it out and left the other. So then we go to I think we picked all this. Interest, depreciation. So we have depreciation. Depreciation is provided as follows. Equipment 10% straight line. This is quite straightforward. The equipment 10% straight line. So you just take 10% of equipment. The cost is 20,000. So 10% of 25,000 is 2,500. 10%. So depreciation, equipment, 10% of 25,000. Remember, this is 2,500. 10% of 25,000. We are restricted the zeros. Then we have the second depreciation. It is depreciation on furniture and fittings, 15% reducing balance method. So this will be depreciation, furniture and fittings, and this is 15% off. 15% off. So we get, this is reducing balance method. So we take the cost less the accumulated depreciation. So what is the cost? 80,000 less 46,000. Remember the restricted zero, so that is the effect. 80,000 less 46,000. 80,000 less 46,000. So 15% of 80,000 less 46,000. This will give you 80,000 minus 46,000 is equals to 4,000 times 0.15. This gives you 5,100. So we have 5,100 there. Like that. $5,100. That is 5,100. So that is the figure that you are going to have there. Good. Do you have anything else remaining? Anything remaining? Now, since we had bar loss, we will consider it almost, it's just like an expenditure because we were spending money here. Bar loss, I think let's not talk of bar expense. Bar loss, if it was an income, surplus will have indicated it up here, but since it was a loss, we can put it here to show that some money, the equivalent of the loss, was actually spent. This is 25,700. So we have 25,700 like that. So then I don't think if we have any other thing remaining. No depreciation thereof. We charge a full year's depreciation on assets. Sorry, there's something here. We might have not captured it right. There's this statement here which we have not applied anywhere. So it's only important that we consider it. It is the policy of the club to charge a full year's depreciation on assets in the year of purchase and no depreciation in the year of disposal. It is the policy of the club to charge a full year's depreciation on assets in the year of purchase and no depreciation in the year of disposal. There must be an effect, so let's look at it. Which item was purchased? Bar purchases, equipment purchased. There was an equipment that was purchased valued at 14,000. There was an equipment that was purchased which was valued at 14,000. And no depreciation in the year of disposal. So there's something about this purchase. There's a purchase of an equipment. There's a purchase of an equipment here, which we need to consider. So equipment 25,000 plus 14,000. So this 25,000, equipment purchase 14,000. So 14,000 plus 25,000. This gives us 39,000. So this figure here is supposed to be 39,000. So this we might have gotten this wrong. So let's just correct that before we move on. 39,000. So this will give us 3,900. 3,900. That is the 10% of the 39,000. Just to be on the safer side, let's also check furniture and fittings. Are there any additions to furniture and fittings? Any additions to furniture and fittings? Furniture and fittings 80,000, and then so on a reducing balance basis, the current value of furniture and fitting, I think this one also we had not gotten it right. So let's also check this, that the cost is 80,000 and then the furniture and fittings is 46. The current value is 46,000, which means the accumulated depreciation is 34,000. That is the accumulated depreciation. So if we are to work with the written down value, actually this becomes our written down value. This will be our depreciation. I think we had captured it wrongly. So we'll come here and say furniture and fittings 15% of the written down value. Please take note of that. Sorry, 15% of the written down value, which is 46,000. 46,000. That's how it's supposed to be. That's how it's supposed to be. That is the written down value. So 15% of 46,000, 0.15 times 46,000. 46,000, that gives us 6,900. So take note of those two corrections. 6,900 6,900, like that. Good. So I think we are good to go. So let's add. This is 20,000 plus 9,200 plus 3,900 plus 6,900 plus 25,700. That gives us 65,700. So we have 65,700 here. 65,700, and these are expenditures. So we less from 145 to 100. We less from 145 to 100 minus 145 to 100. That gives us 79,500. So 79,500. And because this is a non-profit making entity, we call this surplus. Surplus because the incomes have exceeded the expenditure. So surplus 79,500. This marks the end of our statement of income and expenditure for the year ended 30 June 2021. So our surplus 79,500. Now we go to C, which is the statement of financial position. Again, we'll just start like the previous ones. Afia Youth Club, Afia Youth Club, Afia Youth Club. I guess you must have learned some few lessons here that you need to be extra careful. Then statement of financial position, statement of financial position, statement of financial position for the year ended. No, sorry, this is as at. As at. Balance sheet is always as at 30th June 2021. Balance sheet is always as at a particular date, not for the year ended. So get that one right. Then we'll have, as usual, shillings 000, shillings 000. We are restricting the zeros, and shillings again 000, restricting these zeros. So let's move. We start, and we are going to start with what? Now we start with land at cost 90,000. And have we been told anything about land depreciation? I doubt if we have anything on land depreciation. So we'll just come here and say non-current assets. Then start with land. The value is 90,000. Depreciation, no, 90,000. Unless if it's appreciating. But so far, I think we don't have that. So 90,000. Then we have equipment. Now equipment, remember, it's 25,000 plus 14,000 that we had left out. This one, the equipment purchase 14,000. So it's 39,000 and then 39,000. That is the equipment. So now this time we are very keen. Equipment, it's 39,000. 39,000. And then the depreciation, accumulated depreciation. Now for the accumulated depreciation, remember this was quite challenging, but now it's not challenging anymore. The cost was 25,000. This is the net book value. It means it had depreciated by only how much? 5,000 shillings. It had depreciated by 5,000. This is 25,000 the cost minus the written down value currently. So it means the accumulated depreciation so far was 5,000. Then plus the depreciation for this particular year. So it will be 5,000 plus depreciation for this year, which you had captured here. Depreciation for this year, which is 3,900. So 5,000 plus 39, that gives us 8,900. So that's how it goes. So 39,000 minus 89. That was a bit tricky. So 30,100. Good. Then we go to the next one, furniture and fittings. Furniture and fittings. Furniture and fittings, the value was, now this time I know we captured it correctly, it was 80,000. Then the written down value is 46,000, which means the accumulated depreciation is 34,000. So it's the 34 that we are interested in. Book value is 80, 34 is the accumulated, but we are going to add the depreciation also for this year. And the depreciation for this year is, for furniture and fittings, that is, it's 6,900. So it's 34,000 plus 69. That gives us 40,900. So we'll have furniture and fittings 80,000 with a book value, and then we have 40,900 as the calculated depreciation. And then here we now have 39,100. Sorry for that, 39,100 as our net book value. Then we will now move to the next one, the next asset. Do you have the next asset? Bank long-term deposits. Yeah, we have long-term deposits. The fact that they are long-term means that they are non-current. Long-term bank deposit. That is 12,000. And I think there was something also. The long-term bank deposit, we have 20,000 again that was deposited this year. So we have 12,000 previous year plus 20,000 for this year. This one transferred to long-term deposits plus this 12,000 long-term deposits. So long-term bank deposits we have 32,000, which is 12,000 plus 20,000. So long-term bank deposits, we have it there. Long-term bank deposits. How much? 20,000 plus 12,000, that is 32,000, and there's no depreciation, so we'll still have 32,000. Do you have any other non-current asset? I doubt if we have any other. Check around, check. There is no any other non-current asset. So get the total before we can move to the next stage. Get the total here. This is 120 plus 39.2 plus 32. That gives us 191,200. 191,200. 191,200. Then we go to the current assets. So let's check on our current assets. So current assets, we start with land and cost, equipment, furniture, buy inventory. Of course, we'll have the closing inventory as an asset. Subscription in arrears. Yeah, we have those subscriptions, especially the check bank balance, we have them. Long-term bank deposits, long-term loan bank. Okay. So we have all these. Okay. Then okay, so let's identify our current assets. So the first obvious current asset that we are going to work with is this buy inventory, 19,800. 19,800. Buy inventory, 19,800. So have buy inventory, 19,800. That is closing stock for the bar. Then the second one that we are going to work with is this subscription in arrears. Yeah, subscription in arrears, these are debtors. They are supposed to have paid us, but they haven't paid us. So subscription in arrears, 4,000. It's the same as accounts receivable. So subscription in arrears, 4,000. Subscription in arrears, 4,000. Then the third one, if we have back creditors. Those are subscriptions in advance. Those are liabilities. So we have bar wages. Okay, interest receivable on long-term deposits amounted to 2.2. These are interest receivable, so it means they have not been received. Interest receivable, these are receivable. Yeah, so this means that we are yet to receive interest receivable 2.2, so it becomes an asset. Interest receivable 2.2. Interest receivable 2.2. Thank you. Next is the next one is what? Interest receivable 2.2. The next is we'll now come here and pick the most obvious one, which is the bank balance. Balance at the bank. Balance at the bank, we simply go to the receipts and payment account and take the receipts less the payment side. So you can see 502. Balance carried forward. This is the bank balance, 29,100. This one, 29,100 is the bank balance. So we simply come here and say bank balance 29,100. Bank balance 29,100. So I think we are done. So this will be 19,800 plus 4,000 plus 22 plus 29,100. That gives us 55,100. So just put it like that, 55,100, and then we go to current liabilities. Current liabilities. So under current liabilities, we again identify all the liabilities, and let's just start with this. Bank creditors 16,000. So we have bank creditors 16,000. Bank creditors. This is 16,000. Then we have this bank creditor 16,000. We have buy inventory subscription in advance 24. Buy wages subscription in advance 24. We've received their liability to us, and buy wages due. This is also so 32 and 24. So this is 24 is subscription in advance, buy wages 32. So subscription in advance and buy wages. Subscriptions in advance. We've received them in advance, so they don't belong to us. We are only holding them for next year, so it's a liability, but until next year. And then wages, bar wages due. Bar wages due. The amount was 3,200 if I'm not wrong. So let me just confirm that figure. Bar wages due 3,200. Good. So we've captured that. Interest receivable, long-term loan, excluding interest. The interest for the year ended, interest was paid. So what else? I think we have captured everything. Payment purchase. I think we have captured everything. Okay, so if we've captured everything, let's get the total. This is 16,000. 18 for 18, that is 21,600. 21,600. So we'll have 21,600 here, and since it's a liability, we will have it there, 21,600 like that. Oops. We'll have it there, 21,600. So 21,600. What you are going to do is get the total. This will be our net capital employed. Net capital employed, and we'll have 191,200 plus 55,100 minus 21,600. That will give us 224,700. So 224,700 like that. Then let's look at this finance by section. Finance by section. So finance by, we start again. Finance by will now have, let's identify what has financed this account. So we have number one, we'll have the, whatever amount was there, we'll talk of the accumulated fund. And unfortunately, the accumulated fund, if it has not been given to us, we have to compute, and it will be computed from this. So it's a straightforward exercise. It's a straightforward exercise. So what I'm going to do, let me just delete this and then compute it from here. The accumulated fund. So let's just look at it from here. So accumulated fund. The accumulated fund, you're going just to prepare something, accumulated fund. So what happens is that we are going to add all the assets and then we less the liabilities. It's as simple as that. So assets, you can have assets on one side, like land that costs 90,000, this is an asset. Equipment is 20,000, it's an asset. Furniture at 46,000, it's an asset. Buy inventory at 18,400 is an asset. 5,000 is an asset. 4,500 is an asset. Bank balance. Long-term bank deposits 12,000 is an asset. Long-term loan, this is a liability, 96,000 like that. 16,800 back creditors, 16,800, that's a liability. Subscription advance 16,000, that's a liability. And then accrued buyer wages is a liability, 2,300. Then we add this side, add the other side, and then the difference will be our accumulated fund. So we are supposed to add all this side. 90,000 plus 20,000 plus 46,000 plus 18,400 plus 5,000 plus 4,500 plus 12,000. What do we get? 195,900. So 195,900. And this side also we have 96,000 plus 16,800 plus 16 plus 23. That gives us 116,700. So it means we'll have 195,900 as the balancing figure. So minus 195,900. That gives us 79,200. 79,200. This will be our accumulated fund. So accumulated fund account. So accumulated fund is 79,500. This is our accumulated fund. You simply work out the assets less the liabilities. So we'll come here and say accumulated fund is 79,200. Like that. Then what else do we need to add now here after accumulated fund? After the accumulated fund, we are supposed to add what is it? So we have the surplus of surplus from the income and expenditure, surplus 79,500. So we add surplus 79,500, and then we add the total should balance to that one. So there's something definitely that we've not added. There's something that we must. Long-term loan, yes, we have long-term loan, 96,000, but I think there's some amount we paid. So 96,000 we must have paid. Yeah, we paid 30,000. So it's 96,000 minus 30,000, which makes it 66,000. So long-term loan, 66,000. Let's hope this will now make the whole thing balance. Long-term loan, this is 96,000 minus 30,000. I hope it balances. This will be 66,000. Chances looks like they're going to balance. Let's just cross our fingers. This is 700. There we are correct. So then we add 79 plus 79 plus 66. What do we have? 224. Good. We have it. So this marks the end of this question. 224,700, and this is also called the net capital employed. I'm very sure you must have learned one or two things that are very key when you are computing such like questions, especially where we were almost losing track here and depreciation. We were almost losing track. I'm very sure you must have learned very good lessons that can help you in your other questions when you are calculating. So keep on doing more exercises, keep on following us, and we will perfect this whole thing. That is the answer for part C. That is the answer for part B. And that is the answer for part A. Thank you. Let's meet in our next worked out example. Subscribe and share.